We trying to rob the market. The market has more than enough money for everyone. The goal is to take it because they be giving it up. You just have to be smart. You have to be patient. You have to be disciplined. You have to have a plan. Hello, everyone. So today I am here to help y'all understand candlesticks and like what they mean, because candlesticks are very important when it comes to trading. Like they tell the story, they do the wicks do the damage. Like candlesticks are important. Like the charting and the candlesticks are the meat of the meal. You need the meat. So we're gonna get right into it. Okay, so I have my chart pulled up on TradingView. My candles are purple and green. The purple are my red candles, and of course the green are my green candles. I just feel like red is a sign of danger, so I don't feel like new traders should trade with red and green candles. You can change them whatever color you want, black, white, green, purple. But I don't feel like you should trade with red and green candles. So today we're going over candlesticks and kind of charting. Um, let's get right into it. So basically a candlestick just shows how price moves during a specific time frame, kind of like a mini story of the market. Each candle has an open and a close. The open is where the price started. Let me zoom in so we can look at it as we're talking about it. You know what? I think it's better if I do this. So, okay, so every candle has an open and a close. We're gonna make that's gonna be a green candle. Red candle. And these are like the tools that you use on TradingView. Like they're easy. Okay, so we got a green candle and a red candle, right? Okay, so every candle has an open and close. A open where the price started. So on a green candle, the open is at the bottom where price started, and then the close is where price ended, which green pushes up. That's usually a buy. And then red pushes down, which is a sell. And red candles, their open is at the top because they push down. Okay. The high is the highest point it reached. So the high of a green candle would be here, but we'll get to wicks in a minute. And then the high of a red candle would still be here because it's pushing down. And then the lowest point of a green candle is here, and the lowest point of a red candle is here. So the low is always at the bottom, and the high is always at the top. But the open of a green candle is at the bottom, and the open of a red candle is at the top. So I hope y'all got that. Okay, so if it closed, then it opened equals green. If it closed, hold on, wait. If it closed higher than it opened, then that equals green, which is bullish. If it closed lower than it opened, then that means red, which is bearish. So basically, so this green candle, it opened here and it closed here, so it was green. But if it would have opened here and then pushed down lower, it could have possibly been red. Like it would have turned red. So candles can change colors. So parts of a candle, we're gonna talk about the parts of a candle. And we're gonna use a real candle to talk about this. So the body, which is the thick part of a candle, it shows the open. This is a green candle, so a open and then a close. That's the range of the candle, how much price move within that candle, the range. The open has a price, which the open of this is $621.67, as you can see over to the right. And then the close of this was around $624.08. Well, really, I can see up there $624.07. and the open was $621.68. If you look up here, you can have it where it tell you the open, high, low, close of a candle. Like anytime you go across a candle, if y'all look at the top, it's changing. Like, so it'll tell you that. So you don't have to use math and try to have to think hard to figure this out. Okay. Okay. So the wicks, aka the shadows, which are the sticks, the lines, these are wicks. On all these candles, you see wicks. These are wicks. So those are the shadows of the candle, these wicks. The lines above or below show how high or low price moved before closing. So the wicks show how high the price actually moved before closing. So you have a open, you have a close, you have a high, and then you have a low. Okay, so that's up here, hence open, high, low, close. Okay. Okay. Think of it like the candle is a rapper's day. The body is the real story. The wick is the drama that happened but didn't last. Okay? So the body is the story, is the real story, and then the wick is the drama that happened that didn't last. Candlestick patterns. You should know. So some of the these are the important candlesticks to me. And I do have a candlestick Bible that has like the 3 most important candlesticks and how you can use them. I'll leave that link down below. So we have the doji, which is a small body, which equals market is undecided. So this is a doji. There's all types of dojis, and you have to know because each one means like something different. You need to know if it's a reversal, if it's a continuation doji. But for now, we're gonna stick to the basics. So a doji. So it has a small body, and this candle has wicks on both sides. This is also a doji. It has small body and wicks on both sides. This is also a doji because it has a small body. So doji just means it's small, like it has a small body and possibly wicks on either side, and the wicks are usually longer than the body because it's indecision. The market is thinking, it doesn't know what it wants to do. Then we have another important candle that I like to look at is an engulfing candle. I'm trying to find one. Okay, this, boom. Well, that's them like the power towers. Hold on, yeah. Okay, boom. So right here we have some doji candles, some indecision. Market didn't know if it wanted to go down or if it wanted to continue to go up. But then next, after that indecision, and after they thought about it, it was like, okay, I'm gonna go up. This big candle overtook. So if we were to take this candle and put it here, it overtook this whole move, the move to the left. You always want to look to the left. So it overtook that whole move. So this would be called an engulfing candle. It eats up the whole previous move right there. So that's engulfing. One candle eats up the other. Strong reversal signal. It could be a reversal signal just depending on where the market is, if it's in an uptrend or a downtrend. We're not really talking about that in this video. But if you'd like to know more about that, I could definitely do a video. Leave a comment down below. But yes, so engulfing in the dojis, those are my favorite too. But like I said, I have a candlestick Bible with 3 most important ones that I feel, because there's a real candlestick Bible with over 300 pages of candlesticks, and I feel like that is just too much for a newbie. Like that's too much information. So I kind of like narrowed it down to the most important that can really make you some money in the market if you study those, know those, and use those. Okay. So again, I'm gonna leave the link down below. Okay, so next, now we're going to talk about charting, because we talked about the candlesticks. You don't really need to know too much, but you need to know enough about the candlesticks. We talked about the most important part: open, close, high, low. Open, close, high, low. Okay, what is charting? Charting is how we read the markets visually. You use charts to spot trends, reversals, and setups. Common chart types. You have your line charts, which you can use. These are the types of charts on TradingView. A line chart would look like this. Then you have your bar chart. the bar charts, they look like this. Then you have, I'm sorry, the line chart is simple lines for closing price. Bar charts are old school. They show open, high, low, close. So it says I've never used a bar chart. I've never used a line chart either. Open, high, low, close is old school. And then you have the candlestick chart, um which is what we use. You have different type of candlestick charts. You have the Heikin-Ashi, which gives a cleaner setup. Maybe I'll do a video on that later because I kind of like the Heikin-Ashi too if you know how to use it right. But for the most part, we use the regular candlestick chart, which is most popular and gives the full story. So then we're going to talk about time frame. Time frames are important in charting as well because you need to figure out what time frame works for you and like how you want to look at the market, because somebody else might use one time frame, but you like your trading time or the time you have for trading doesn't align with like what other people like. You just got to find what works for you. In trading, you just have to find what works for you. So time frames do matter. We have the 1 minute, and I save my favorite time frames up here, or the ones that I like to look at, or need to look at throughout the day of trading. So we have the 1 minute. I can't use the 45 second because I don't have the highest paid like membership on TradingView, but I am going to buy it because the way that I trade in futures, I need the 15-second chart, the minute chart, the 5-minute chart, and then the 15-minute chart. So I'm definitely going to invest in the highest paid version of TradingView so I can get all the futures that they offer. But okay, so we have the minute chart, we have the 5-minute chart, and every chart looks different because the lower you go, the more noise you hear, and the noise is the candles. I should have. So let's go ahead and clear this chart. Okay. Okay, so when it comes to time frames, again, we have the 1 minute, we have the 1 minute and the 5-minute and the 15-minute. I feel like those are scalpers playgrounds. Those are for people that want like quick moves, like don't want to be in a trades that long. Then we have the 1 hour and the 4 hour. I like the 1 hour and the 4 hour for like my overall like market trend. Those are for day traders. That's the sweet spot, the 1 hour and the 4 hour. I feel like anything under 1 minute is scalpers. Like from 15 and lower, that's scalpers. And then 1 hour, 4 hour. I don't use the 2 hour, but you have that option. Those are day trade time frames. Then you have the overall picture, the bigger picture, which is the daily, the weekly, and the monthly. I don't really use the monthly. I have looked at the weekly before, but the weekly and the daily are for swing traders. It gives you the bigger picture. The bigger the time frame, the stronger the move. Like if you catch a good play off of this, like mind y'all, these candles are well, that's on a month, but mind y'all, these candles are like one candle equals we're on a daily, so one candle equals a day. So say I would have caught this right here because it gave confirmation that like it wanted to go up, it wasn't gonna go no lower. Like it didn't even want to go close that gap. So I could have caught this, and this was back on May the 28th. If I would have wrote this was at 587. If I would have wrote this all the way up until a swing trade all the way up until like July 3rd, which was the other day before market closed, it went up. That was 567. That it went up over $30. It's at 525. Like that would have been a life-changing play. Like all you need is a $2 to $3 move. That was over a $30 move if you could have just held on, if you would have bought the time and bought your contract to expire like July 3rd. Or you could have did July 3rd because shoot, it got up there by June 25th. So you ain't even have to hold it out, but you having time would have helped you. We're gonna get into that in the options video. If y'all want that, if y'all want me to drop how to like option, like how to see moves, let me know down in the comments. Because I don't want to give y'all no information y'all don't need. Okay, so next we're gonna talk about support and resistance. But those were the time frames. Like I said, the bigger the time frame, the larger the move. 15-minute and down is for scalpers. That's for quick plays, and then the 1 hour and the 4 hour are for day trade. That's like the day trade sweet spot. And also it's also other stuff that goes into that. You have to know like which time frames align, because you can get your overall bias on a higher time frame like the 1 hour to 4 hour, but you need to know what lower time frame you need to execute on in order to get it right, because all these time frames don't align with these time. Like, you need to know that. And if y'all want me to drop a video on that, let me know, because I do have a time frame alignment like list. So we're going to talk about support and resistance. Support is basically, let me get my little tools. So support is the floor, it's the bottom. Let me make this line bigger. Support is the bottom, it's the bottom. Looking at this chart, I see the bottom right here, where it came and stopped and didn't go no lower. That's the bottom. If I wanted to look for some more bottoms, this would be another bottom. So those are support levels. Those are support levels. I see another bottom. That's a bottom. Like you can find so many support levels. Okay, so that's support, which is the floor. Price keeps bouncing off of. So price came down here, bounced, went up a little bit, came down, bounced. Like that's support. So that's support. So now we're going to talk about resistance. Resistance is the ceiling. Price struggles to break it. So support is at the bottom, the floor. Resistance is at the top, the ceiling. Let's go ahead. Resistance is at the top, the ceiling. Resistance is at the top, the ceiling. Resistance is at the top, the ceiling. Support is at the bottom, the floor. Support is at the bottom, the floor. Okay, so we got support, we got resistance. There. Next, so let's go back here and use some of this support and resistance. Go on, scroll back. Okay. Boom. When support breaks, that means it might become new resistance. So like support usually come resistance, and resistance becomes support, because price just moves back and forth. Like it matters if it takes days or weeks or months. Like it just moves back and forth. It just goes up, goes down, goes up, goes down, goes up, goes down. That's all it does. Just repeats itself. So when resistance break, that means it could turn into support. So when support breaks, it could turn into resistance, and when resistance breaks, it could turn into support. Think of it like this. You keep hitting your head on the ceiling, resistance. Once you bust through the ceiling, it becomes your new floor, support. So boom, we're going to take it to the charts. So you see how, we're going to go right here. Okay, so you see how price kept going up to our ceiling, our resistance, and getting knocked down. It went up there, got knocked down. Went up there, tried to go up, got knocked down. Came down, tried to go up again, got knocked down. Tried to go up again, got knocked down. Just kept doing it. Got a little more strength, came up again. We have to make our line come, because price just keep doing the same thing. So boom. Came up, finally got some strength to break. Finally got some strength to break the resistance. And if we extend our resistance line, it became support. it became support. It started holding that price up, and then price found a new ceiling and kept hitting it and kept hitting it and kept hitting it until it broke the ceiling, broke the resistance, and made it support. So even if we was to delete that and just use that one line, like even if we was to delete all these lines, like they line up. If you just have your lines out, just draw them out, like it line up. Then it found a new ceiling. My line look crooked. It found a new ceiling until it busted through. Boom, bust through and made that the new support. Then it found a new ceiling. Yeah, prices keep doing the same thing over and over, basically. So we're going to talk about how to read the chart. We basically just talked about it, but we're going to go deeper into it. So we're going to look at the trend. That's the first thing. You coming in the market and you looking for a trend. Let's go to the one now. You come in the market and you looking for a trend. You want to see if the market is, let's go here. You want to know if the market is going up or if it's going down. If it's going up or if it's going down, okay? Uptrend, downtrend, and then the third one is sideways. Sideways is when you see it just like zigzagging, making small moves, zigzagging. Right here is perfect example, zigzagging, small moves, okay? That is sideways. Market is thinking. Don't mess with the market when it's thinking. You don't want nobody messing with you when you think you're trying to get a plan together. Leave the market alone while it's thinking. You ain't gonna do nothing but lose. Like, just leave it alone while it's consolidating. Leave it alone while it's thinking. So we see this. So we're gonna identify our support and we're gonna identify our resistance. Boom. We found our support. It's right there. Price keep coming down to about that area and bouncing back up. Now we're gonna identify our resistance. Boom. Usually wicks, if you get to the top of a wick, there's probably 9 times out of 10 support or resistance. Look for the wicks. So boom. You could make it a little higher. You can make it right there if you want to. But this is the last high that I see to the left. Because just say this is current price. Let's just say this is current price. So this is the last high I seen to the left, the most recent high. Okay. So I would draw my resistance there, and I'm going to wait to see because it was consolidating. The market is thinking, so I'm going to wait. I'm going to let it think. I'm going to let it make a decision because the market has to make a decision whether it make it today, whether it make it tomorrow. It has to make a decision. I'm going to wait to see if it breaks out of this low, if it breaks this floor, or if it breaks through the ceiling. If it breaks through the floor, then 9 times out of 10, I'm going to get in for a sale. If it breaks through the ceiling, 9 times out of 10, I'm going to get in for a buy. Of course, there's other confirmations you have to wait for and you need your trading plan, but for the most part, all it's doing is breaking through the ceiling and about to make that new support. Breaking through the resistance and turning it into support. That's all it's doing. So you identify your support and resistance zone. Watch for the candlestick patterns. We talked about dojis and we talked about engulfing. Boom, we got an engulfing right here. This candle right here ate up this whole move. They gave you confirmation there, baby. Watch for this high because 9 times out of 10, they want to go up. Okay. Wait for your confirmations. The confirmation would have been this engulfing candle. Boom, took over that whole move. Then it broke out of the resistance zone. It broke through the ceiling. That's your second confirmation that, okay. And then this was the engulfing candle. So that means strength. Like, we getting somewhere. Like, the buyers are fed up with the sellers. So we're getting somewhere. Once you get your confirmations, the engulfing was the first confirmation. The second confirmation was it breaking through the ceiling. You can wait for a red candle to come back and retest the ceiling just to make sure it don't break back through it when the false breakthrough. But once you get that red candle, then and it stays above your ceiling, that's now your floor, ride that bitch up. Ride it up. Get you some money. Ride it up. You need to know your exit and your entry. You need to know what price you're gonna that's your entry when you get that red candle. But you need to know where you're gonna exit at. You need to have a goal. You need to know what price you're trying to see it get to, and you need to know your exit. You need to know your exit. Remember, don't just look at one candle. We did not just look at one candle. We had like two confirmations. We didn't just look at one candle. We waited for two confirmations. Look at the story that the candle is telling you. Don't just look at one candle. Look at the story the candles are telling you. These candles told you that, okay, I'm thinking. I tried to get up here, but I couldn't. I didn't have enough strength. Like I couldn't break that ceiling. So I got knocked back down, came back down to get some strength. And because I couldn't break through this floor, I'm going to go back up and try to break through that ceiling because now I done got me some water. I done took me a little break. I done thought a little bit. Now I can make a move. I can bust a move, and it busted a move. Please do not trade based on your feelings. Fuck your feelings, stick to the plan. That's my saying. Like, fuck your feelings, stick to the plan. Trading frugal over here. Like, we don't play with our money. You have to practice this. You can watch my video over and over if you have to, but you need to practice this. You need to go look at the charts when you don't have anything to do. You need to look at the charts when you got to do if you want to be a trader. Like, you need to practice this. You need to look at these candles, learn how to identify these candles, know what they are, learn how they can help you. Make this bag. We trying to rob the market. The market has more than enough money for everyone. The goal is to take it because they be giving it up. You just have to be smart. You have to be patient. You have to be disciplined. You have to have a plan. I hope this video helped y'all.